Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. The news media have been speculating for months on the nature of the economic recovery. There's been discussion of the V-shaped recovery, the checkmark-shaped recovery. Well, it seems that the much-feared W-shaped recovery is upon us. Attempts to open up the economy and to restart the floundering food and beverage industry have hit a snag. This week, we saw a record number of infections across multiple states in the U.S. There's understandably a degree of COVID-19 fatigue in the population. Summer's in full swing, and people want to enjoy the outdoors. Businesses open in California for 2 days before being mandated to close again. The question is, how to reopen the economy safely? The U.S. recorded a stunning 130,000 new cases of COVID-19 over a 2-day period this week alone. Hotspots include the populous and economically important states of California, Florida, Arizona, Texas, and Louisiana. Texas, California, and Florida are all reporting record numbers of deaths so far in the pandemic. In a world where scientific data seems to be politicized, it's hard to know what's true anymore. And in a world where economic data is politicized, it's hard to know what to trust. In a world where getting any reliable, unbiased data is increasingly difficult, several software-as-a-service companies can offer a window into what's happening in the economy. It seems that the data is often presented with an agenda or a narrative, and on this show we aim to provide data, mixed or confusing as it may be, to allow you to draw your own conclusions. OpenTable is used to reserve your table at your favorite restaurant. I use it frequently when I travel. And data from OpenTable shows that people were venturing back out to restaurants at the end of May and early June as the economy reopened. But in the last few weeks, reservation bookings on the platform have slipped again, especially in states that have rolled back reopening plans like Texas, Florida, and Georgia. Homebase is a company that provides time scheduling and tracking software used mostly by small businesses. They saw the number of hours worked plateau in the last week of June, which is likely to continue, according to data from the company. The pace of improvement of businesses reopening and workers coming back in June slowed from a month earlier. This is according to Homebase's monthly report. In May, the number of employees working improved by 37%, but in June, the gains were only 6%. Remember, we're talking about mostly small businesses. And in addition, Homebase has seen declines in growth with states that have higher COVID-19 cases like Arizona, Florida, and Texas. It's unlikely we're going to see a national shutdown like we saw in March. The appetite just doesn't seem to be there in the White House. It's likely that we'll see numerous state, level, and local shutdowns and hotspots as outbreaks flare up. The slowdown in infections that was predicted during the warm summer months hasn't materialized. In fact, we're seeing quite the opposite. Many school districts across North America are making plans for the upcoming school year. Some are opening 2 days a week, some are going 100% online for the start of the school year, others are opening fully with attempts to increase social distancing in the classroom. The number of families where both parents work is going to be further impacted by the decisions made by school boards. Some families simply don't have the luxury of finding childcare. So what does this all mean for real estate investors? Well, this is starting to feel like 2008 all over again. I'm seeing distressed properties coming on the market below construction cost. In earlier months, properties like this would have been snapped up in hours at much higher prices. And now, they're staying on the market for days before being snapped up. We've been active in placing offers in distressed properties when they meet our criteria. We've set our own inspection terms, even when the bank is selling the property on an as-is basis. As an investor, market conditions are starting to feel more favorable. And when I talk with investors, in particular newer investors who didn't enter the market during the last down cycle, many are wondering when to jump into the market. As credit markets have dried up, we've seen some lenders exit the market altogether and deals that were in process completely evaporate. Lenders who have stayed in the market have sought to profit from the reduced supply of credit by raising rates. We've received a mixture of debt offerings. Some have been quite reasonable, and others have had a vulture-like quality to them. Generally speaking, we're taking an extremely conservative stance. If a deal doesn't meet our criteria, we're going to pass on it. There'll be many more to choose from over the next couple of years. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.